Is the drive to the close
If you had access to a car like this, would you take it back right away?
on Bloomberg Radio.
Well, here we are. Carol, 18 minutes to go until the close of equity trading here. We just got an update from Bill Maloney and Charlie, and we're kind of bouncing around a little bit, but still in the green on the S&P 500.
Yeah,
barely.
kind of an interesting day. You know, we got that monthly jobs report and coming in stronger than expected. So kind of a little bit of a reset in terms of expectations for the kind of Fed cuts we might get this year. S&P just up a hair, up about 5 points. Dow is lower by 47. NASDAQ 100 up almost 100 points. So, it's kind of, we're definitely off our best levels of the session. Now it's kind of on to the inflation print on Friday.
You know, we were speaking to Anurag Rana earlier today.
Yeah, about software, right?
Yeah, we're like, okay, well, we've seen disruption yesterday in financial services companies and Charles Schwab and the like. We've seen consultants be disrupted, legal services be disrupted. What's
and
the next shoe to drop? Real estate services stocks.
Yeah.
Sank today. Investors assessing the company's vulnerability to the newest crop of AI apps and tools that threaten to disrupt leaders. CBRE plunged as much as 15%. Jones Lang LaSalle, JLL, 13% to the downside. Cushman and Wakefield down 15%.
Welcome to the AI scare trade. Let's see what our next guest has to say about it. I'm curious if she's hearing this from clients as she travels around the country. Lauren Sanfilippo is Senior Investment Strategist for Merrill and Bank of America Private Bank. She joins us right here in our Bloomberg Interactive Broker Studio. Welcome back. Good to have you. This AI scare trade. Are people bringing this up? Or how do you, I'm just curious what the communications you guys are having around this, if at all.
Yeah, well, you don't know who's next, right? We don't know who's next. But the idea around sort of the clients thinking coming into the year, right? This is a very concentration type risk thing that they were talking to us about. No one was anticipating these sort of scares sector to sector. But now it's more like, where's my exposure? But what tomorrow will bring, who knows on this AI scare trade, right?
Yeah, Anurag on our Bloomberg Intelligence team, he argues that it's overdone, that the market leaders now will come out of this even stronger. I guess the big question that a lot of people have is what this looks like on the other side, and the way that we should be thinking about this technology, not just from a microeconomics perspective and the effect on individual companies, but what's the effect on the actual economy, on productivity? Right. How are you looking at that?
Right, and I think too, the other thing, like when we first saw the software meltdown as an example, you didn't know what the inflection point would be on the other side. Like when would this stop? When would the flush stop? So that's a little bit scary. But from the productivity angle, we've always liked what AI could probably complement a workforce. That was sort of like the near-term impact at least, right? Productivity, that's the long-term story. We're not really sure yet on what AI will bring. The hyperscalers, they're raised or reaffirmed their commitments. So we're going with that, right?
Well, what does that mean though, Lauren? Like if you've got investors who say this AI trade, everybody says they're spending, we see the spend that's happening, but then we also see companies getting hit. Like what do you guys advise for investors who want to take advantage of the opportunity? I feel like last year we talked a lot about the energy story, but I'm just curious how you guys are advising clients on that front.
Yeah, energy and utilities, that story hasn't run its course, right? I mean, there's still a dearth of energy out there to power this AI data center build out, right? It just got surprisingly physical, even though we were advising around, utilities and industrials and how you actually build out that AI build out. There was still sort of scarce materials and there's more to go with that trade. There's no reason to give up hope on that, right? Most clients are at least market weight, if not overweight tech generally. So we're more neutral on that sector right now, but I think for all the right reasons.
What about portfolio positioning in this environment and the rotations that we're seeing? A couple of weeks ago, it was small caps. Now there's been concern about some of the laggards, especially among mega cap tech. What's the rotation that you're advising right now?
This has been significant. I mean, really since the beginning of November, right? So it didn't start at the turn of the year, but we have liked emerging markets as an example for some time. And it would have been an opportunity cost to not be involved in emerging markets last year.
So it's more regional than it is in terms of sectors.
Oh, well, we do like the cyclical trade here in the U.S., right? We still think U.S. equity is generally best in class. So yeah,
really?
we have liked a lot of the industrials, for example, utilities.
Look, in the U.S. market, you've been right for the past 15 years or so. But if you look at broader history, it does tend to be more global. Does the more global trade come back?
And sometimes those cycles last longer, right, than 1 year. So yeah, we're not giving up on EM, and actually that market performance
developed
we're a little bit less positive on, but I like a lot of those structural stories. I mean, there is a lot to like. Defense as an example, of course, NATO bringing up their targets. There's a lot going on. I would follow those the structural stories abroad.
I want to go back to emerging markets because if you look at the MSCI Emerging Markets Index, it's up almost 12% year to date. So definitely some outperformance. S&P is just up about 1.5% year to date. And then I looked at the MSCI World Index, up a little bit more than 3%. Emerging markets can be volatile. We know that's like, the basics when it comes to investing. Is it a longer term trend? Like how much longer? Or if you advise somebody, a client, to put some more exposure, I mean, it was up 30% last year.
Yeah.
So I'm just curious, like how much or how long a trade might this be?
So that's a good question. Last year, it was a large part of that story was the dollar, right?
Correct.
The weakening dollar added like 7.5% on a trade weighted basis. It was down last year. A lot of that was the first half of the year.
The weakness in the U.S. currency.
That's correct. So we still see the U.S. dollar weakening into year end. But I think the more important part is fundamentally, have you seen the EM earnings chart? It's like best in class. I mean, really, that EM chart is impressive. So we like that fundamental
So increasingly the fundamentals are there.
Yeah, actually. It's right. And that's backing up the performance of last year. And global growth is reaccelerating. Trade is reaccelerating, right? And so there's actually a really great setup. And then to your point, boom, bust, that happens with EM, right? Particularly the commodity producers. So you can expect to see that like in Latin America as an example.
How do you, I mean, some of the volatility that we've seen, I think, has been surprising to people early on in this year. But as somebody who deals with the folks over in the private banking side of things, how are they, not necessarily asking you questions, but people on your team questions? Like when the phone rings, what are they asking? What do they want to know?
Yeah, I
do you
would
not want to pick up? No. Depending on the day.
Some days, right? Well, I would say first, I mean, other than last week, right before, just year to date before last week, the VIX really hadn't spiked above 20. I mean, so you had to put it in perspective first on just that one point on volatility, because it seemed like sub themes were getting hit. Like, right, it was just software for a moment,
and then it was Bitcoin.
Yeah, and so it was like it seemed more orderly at first, I would say, and it wasn't really until last week did that calculus change.
Real quickly, 20 seconds, Bill Ackman, 10% of his portfolio now, Meta. Do you guys still like the big cap tech names, the hyperscalers, the Mag 7?
We still like hyperscalers. Yeah, like I said, we are equal weight, but that's just because of their growing weight in the index, right? But I mean, best in class for sure.
All right. Lauren, always good to see you.
Yeah,
thanks for coming by the studio. Lauren Sanfilippo, Senior Investment Strategist for Merrill and Bank of America Private Bank, joining us here in the Bloomberg Interactive Brokers studio.
All right, folks, just about 10 minutes away from the closing bell on this Wednesday. Still off our best levels of the session, just up about 8 on the S&P 500, getting ready to count you down to the close. This is Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, under 7 minutes to go until we wrap up the trade on this Wednesday. Heading over to our TV colleagues in just a moment. We're going to count you down those closing numbers, some of the stocks on the move, tracking some earnings after the close as well. Just a reminder, S&P just up about 6 points here with just a few minutes to go, down 37 on the Dow Jones Industrial Average. NASDAQ 100, Tim, though, a gain of more than 100 points.
I want to go back to one of the Bloomberg exclusives that broke during our 2 o'clock Eastern time hour today. It's a Mark Gurman exclusive. Mark was first to report that Apple's long-planned upgrade to the Siri virtual assistant had run into snags during testing in recent weeks. Apple shares paired some of the gains on the news. Some of the snags, okay.
I'm listening.
Issues with Siri, improperly processing inquiries, taking too long to handle requests, accuracy issues. That's prompted the latest postponements. These postponements could, at least for some features, could go until iOS 26.5 or 27.
All right, so they've got to figure this out. Like, Siri has been a little bit of an albatross, right, for this company. And I just feel like we all talk about it, we laugh about it, but it's kind of frustrating. But it would be an important thing for them to get right. It's almost surprising that they haven't gotten this right.
They were supposed to be included in iOS 26.4, which was set to come out next month.
Yeah, they're now working to spread them out over future versions, according to people familiar. This is, again, an exclusive by our Mark Gurman. So spreading that out would mean possibly postponing at least some features, as Tim mentioned, until at least iOS 26.5. That's due in May. iOS 27 comes out in September. Yeah, I mean, just this is the long and winding road of Siri that is something Apple's got to deal with. They first announced plans for the revamped Siri back in June of 2024. According to Mark, that year, the iPhone maker showed off capabilities that would let the assistant tap into personal data and on-screen content to better fulfill requests. So the upgraded Siri also would let users precisely control apps from Apple and third parties via their voice. All the new features were due by early 2025, but that's not exactly how it rolled out.
Internal iterations of iOS 26.5 also include a settings toggle, allowing employees to enable a preview of that functionality. That suggests Apple is weighing the idea of warning users that the initial launch is incomplete or may not work reliably, similar to what it does with beta tests of new operating systems. I don't know. This has been such a struggle for Apple.
Yeah, and remember AI, they're really working with Alphabet, right?
Yeah.
And in terms of
they're using ChatGPT,
yeah.
OpenAI's ChatGPT.
But they're not creating, they're not building the data centers, they're not doing necessarily that for AI support. So I don't know. And some say maybe that's a smart thing that they're not doing the spend now and they're relying on that, but we'll see what it means longer term.
The revamped Siri built on an entirely new architecture dubbed Linwood. Its software will rely on the company's large language model platform known as Apple's Foundations model, now incorporating tech from Alphabet's Google Gemini team.
Yeah, and I think we did see the stock dip a little bit on this story when it crossed on the Bloomberg.
Definitely. It paired some of the gains that it had today.
Yeah, because it was up a lot more in today's session. I think up as much as 1.5%. Right now we're looking at, that's the wrong stock. Sorry. This is what happens if you don't change the ticker. The stock was up 2.4% at its highs today. We're talking about Apple. Right now, a gain of about 0.75 percentage point.
Do we have time to talk about bonuses? Because it is bonus season, as Alex Semenova reminded us.
It is if the company's doing well.
Wall Street bonuses and an aggressive savings
Just
plan
ask Lululemon.
have helped shrink New York City's expected two-year budget gap by roughly $5 billion. The mayor out saying, quote, "I'm glad to report that by assuming an aggressive posture on savings without compromising city services, incorporating updated revenue and bonus estimates, and using in-year reserves, we've lowered the $12 billion gap to $7 billion.
This is why people are saying, this balance between taxing businesses or taxing the wealthy, you want to be very careful because things like bonuses and higher bonuses can help.
You want them to be
here.
City,
exactly.
So they get taxed here.
Right. That's revenue coming in, that tax revenue. So I think it's kind of tricky, kind of interesting.
You live in New Jersey, but you still pay New York City taxes.
I do, but there's like this stuff that goes on.
So thank you for your service, Carol.
You're welcome. Now get rid of the snow, everybody. All right, everybody, do not go anywhere. We're counting you down to the close. Some earnings as well coming your way. Stick around. Tim and I heading over to our TV colleagues. The closing bell. It starts right now.
Starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, Katie Greifeld here with Scarlett Fu. Romaine Bostic out on assignment here to help take us through the closing bell. It's a global simulcast. Joining us now is Carol Massar and Tim Stanovic. We bring together all of our audiences to talk about a market day that's ending again, Carol, without fireworks. We came in, we saw futures surge after that jobs report, and now it looks like we're going to finish up pretty much unchanged on the day.
Yeah, kind of ho-hum, but you're not if you're a part of the AI or latest leg of the AI scare trade. And we're definitely seeing that with real estate services stocks dropping sharply as investors assess the sector's vulnerability to the newest crop of AI applications and tools that could disrupt many industries, including real estate. So, Tim, this is something that came on your radar. I mean, Jones Lang LaSalle, Cushman and Wakefield, and CBRE all seeing some hits today.
You know, you say Romaine's on assignment.
We did, yeah.
He had him on our show earlier today.
We'll have him on our show
just
later.
about a half hour ago. He's in Milan. We checked in with him. Everything is fine. Everything is going great. I said, I'm sorry, Romaine, that you drew the short straw and you had to go to Italy for the week. But he said he's actually having a really good time despite all the hard work he's doing.
Tim, aren't you supposed to talk about Bitcoin here? I'm thrown off.
No, I just wanted to fill everybody in on
where Romaine is.
Yeah.
Working hard in
On assignment.
Romaine, call in. Feel free to call in anytime. Talking about that idea that real estate services stocks are now the latest victims of the AI scare. I loved what Dr. Ed Yardeni told us earlier. He was talking about this scramble for AI immunity, and that's why you see gold, for instance, continue to recoup some of its losses from late December, late January, I should say, and it's back in the upward trajectory.
Yeah, I like what Matt Levine called it in his Money Stuff today, the AI whatever apocalypse trade, because that's what it feels like. The S&P 500, it is going to finish flat on the day, maybe slightly lower if you're a pessimist. You could say the same about the NASDAQ, down about 0.2%. The Dow Jones, it's down about 0.1%. The big loser today was the little guys, though, the small caps. That index, if we pull out here, you can see it finished down about 0.4%. Carol, of course, as those Fed rate cut bets got pushed out.
All right, let's go to the S&P 500, guys. 285 names in the index, higher today, 218 to the downside. Scarlett, 1 unchanged, so a little bit more of an upbeat slant there to the S&P 500.
Yeah, and you see that reflected in the sector performances as well. There's 11 groups in the S&P 500, and 8 of them are higher. They're in the green. Energy up 2.6% as a group on the day. We know that big energy companies are in Venezuela with the Energy Secretary Chris Wright. Consumer staples also gaining more than 1.5% or 1.4%, and materials up 1.3%. The laggards, financial, communication services, and consumer discretionary.
All right, let's take a quick beat here to take a look at McDonald's earnings. And the red headline on the Bloomberg terminal is their comp sales for the fourth quarter coming in at 5.7%. That was the increase there. That is above the estimate of about 3.76%. So good news there when it comes to comp sales beating estimates. The same could be said of fourth quarter revenue as well, coming in a hair above $7 billion. The estimate had been for $6.83 billion. You can see traders trying to decide what to do here. Currently, the stock higher by about 3% after hours.
Remember, in an environment where consumers are focused on value, that's exactly what McDonald's is leaning into and has been. The company's chairman and CEO, Chris Kempczynski, saying that McDonald's value leadership is working. Quote, by listening to customers and taking action, we have improved traffic and strengthened our value and affordability scores. That focus helped increase global system-wide sales by 8%, delivered strong comp sales growth across all segments this quarter. The momentum we've built reinforces the progress we've made with our strategy and has earned us the right to look forward together as a system.
All right, so just to rehash, we've got now McDonald's bouncing around here, but up about 2.7% here in the aftermarket. Again, U.S. sales growing at the fastest pace in more than 2 years in the fourth quarter. Value meals continue to resonate with cost-conscious diners. Companies focus on affordability helped improve traffic in the fourth quarter. Diners also spending more per visit in the United States due to successful marketing promotions. That's the words of the company. And so our team kind of doing some analysis. Red Brown, thank you so much, at Bloomberg News, saying that the results suggest that McDonald's is gaining market share as consumers change their spending habits in response to higher costs, despite a decline in operating margin that did miss Wall Street expectations. Always keeping an eye on margins. All right, as we watch for some more earnings, including Cisco to report after the closing bell, let's go to some of the individual gainers. This was the number one gainer in the S&P 500. We're talking about Generac Holdings. This one finishing just off its highs of the day, but still good enough for a gain of about 18% in the Wednesday trade. Maker of generators forecasting a 2026 EBITDA margin range with a midpoint above analyst consensus. We should point out that net sales for the fourth quarter did miss analyst estimates, but KeyBank coming out and saying that they do expect shares to trade higher on that 2026 outlook and positive data center developments. Keep in mind the stock's up about 60% year to date. Third best performer in the S&P 500 here in 2026. We caught up with the company's CEO, and they really entered big time in the fourth quarter into the AI world, and that's by offering up some large megawatt generators. So that is a big play and big generator, pun intended, when it comes to their financials going forward. So some good stuff there. This is one we don't talk about. Ticker is SW, Smurfit Westrock, and that one finishing with a gain of just shy of 10%. Stock is up about 30% year to date, and again, a top gainer in the S&P 500, up the most, I think, since around July of 2024, after the packaging company reported adjusted EBITDA for the fourth quarter that beat the average analyst estimate. So some outperformance there. And one more, Micron Technology, great reader when it comes to the semi space, up almost 10% in today's session, a top gainer in the NASDAQ 100. The company CFO, Mark Murphy, assuring investors that the company is producing its new, much prized HBM4 memory chips in high volumes. That product line is the latest generation of Micron's high bandwidth memory now being delivered to customers. Murphy coming out saying this during a research event put on by Wolf Research. And that stock is up about 40% year to date, Tim.
All right. Well, Cisco just crossing. Second quarter adjusted earnings per share did beat estimates. Second quarter adjusted gross margin coming in shy of estimates at 67.5%. Second quarter services revenue, this is a look back, $3.71 billion. That beat estimates. Second quarter adjusted EPS beat estimates at $1.04. Second quarter product revenue beat estimates at $11.64 billion. Second quarter revenue all in coming in just above estimates at $15.3 billion. Here's the red headline, though, and it's the outlook. Cisco sees fiscal year adjusted earnings per share $4.13 to $4.17. The company saw $4.08 to $4.14. After hours, Scarlett, Cisco shares higher by about 1.5%.
Yeah, you gave the bottom line outlook from Cisco. Here's the top line outlook from Cisco. Full year revenue, $61.2 billion to $61.7 billion. Previously, it had seen $60.2 billion to $61 billion. So raising the range of its revenue forecast there. You can see the stock currently up about 1.3% at the moment.
Well, the company boosting its dividend 2% as well to 42 cents per share. Just a little preview for what we got coming up in just a few minutes. Woo Jin Ho is senior hardware and networking analyst. He's on set with us right now. He's listening. He's looking at the Bloomberg. He's taking notes for what we're going to be talking about. Cisco shares higher by about 1.1% in the after hours. Let's go to some of the decliners on the day while we potentially await more earnings and analysis. Shares of Mattel, look at this, 25% to the downside. This is the biggest plunge going back to 1999. Holiday results fell short of analyst estimates. The company issued a 2026 forecast for lower profit. The stock was up 6.1% through the year for the close of regular trading yesterday. Fourth quarter earnings, excluding some items, totaled 39 cents a share. That missed the 54-cent average of analyst estimates. The company said that shortfall in December sales in the U.S., that grew less than projected. Also, shares of Robinhood taking a tumble today. The company announcing earnings yesterday after the close. Shares fell today by 8.8%. Lower fourth quarter profit due to sharp declines in Bitcoin and other cryptocurrencies. But Vlad Tenev, he said that the company's at the beginning of a prediction market super cycle. He aims to expand into several new markets later this year. I know you guys spoke with him a little about an hour ago.
We did.
What did he tell you? What did he say?
Talked a lot about prediction markets and that super cycle. We talked a bit about, what kind of returns their customers are actually seeing when it comes to prediction markets.
Hold on. Did you say returns in prediction markets?
I did say
You're talking
that.
about returns like we're talking about returns on a stock.
Right.
Or winning.
Is that how we should be looking at prediction markets?
Well, I'm not making that case, but I am talking about, whether or not people are seeing money when they make bets on prediction markets. Or
I heard the house always wins.
A lot of market money. Well, that is the sneaking suspicion out there, Tim. And certainly there's been a lot of research, a lot of academic studies, and also just a lot of concern about, whether people are getting their faces ripped off. So
yeah, I mean, I think, and Carol brought this up a little earlier on our program when we were talking about this, the regulators out there, right? If you're a sports gambling site or app and you're regulated in a different way than one of these like a prediction markets app, like, we got to potentially see some regulatory changes down the line, or regulatory risk, I guess you could say. Finally, shares of Lyft taking a hit today. The company fell after the shares fell after the company issued a disappointing forecast. It missed Wall Street estimates, down 17% on the day today.
All right, guys, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals, we call it the closing bell. Of course, Scarlett and Katie continuing there on the TV side on the close, and Tim and I continuing on Bloomberg Business Week Daily right here on Bloomberg Radio. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Gotta say, Cisco shares jumping around a little bit here in the aftermarket, a little bit higher than they were unchanged right now. Tim, they are down just shy of 2% here.
Okay, let's go through some of the headlines. The company boosted its fiscal year adjusted EPS forecast. The company gives a strong sales forecast in the latest sign of AI inroads. It delivered an upbeat forecast for the current quarter. It signaled that the company is attracting customers in building artificial intelligence systems. In terms of numbers, revenue will be $15.4 to $15.6 billion in the period that runs through April. The company said in a statement today it topped the average Wall Street estimates of $15.2 billion.
And I don't know if you said this, but it does see third quarter adjusted gross margin 65.5% to 66.5%. That's below street estimates, 68.2%. I know the street likes to kind of see good margins there. Also, the company says second quarter AI orders from hyperscalers accelerated to $2.1 billion. So some context there, but we want to get a little bit more analysis from our own Woon Jin Ho. He has been looking at the release and going through it. He's Bloomberg Intelligence Senior Hardware and Networking Analyst. Woon Jin, stock's bouncing around here. What jumps out for you?
Yeah, there's a couple of things going on, Carol. First of all, is the gross margin results and the EPS guide, right? You're not getting the EPS bump relative to the revenue growth. So what it tells me is that the DRAM price spikes or the component issues are also continuing to hit Cisco, which may be a drag on gross margin, and you're not getting as big of a bump on earnings.
So it's not that
more, right? Those components or whatever.
Say again?
Those components cost more.
Yeah, DRAM, contract pricing has been up around 200%.
Yeah.
NAND storage up 100% over the last quarter or so. So it's just been a headwind for not only Cisco but also a lot of the hardware guys.
But not Apple. Apple was able to navigate this. Why can Apple navigate this?
This was the past quarter, and it remains to be seen what happens in the big.
So you say stay
18.
tuned, even for a company as big as Apple that does
exactly.
orders like Apple does orders.
Exactly.
Okay, interesting.
So remind us too, I always love this only just to kind of set the record straight, in terms of Cisco and what they do in AI.
You want to see the whiteboard.
Well, is this is exactly.
Yeah.
But I mean, this is folks who want on-premise systems, correct?
Well,
not only.
Well, they do both on-premise networking systems, whether it's in the corporate or on the data center.
Yeah.
But they also sell equipment to the telecom, right? If you think about some of these routing equipment, these big, large network equipment, it uses a lot of memory, a lot of DRAM memory to carry a lot of traffic. So because of that, they did actually set in a lot of some price hikes last quarter. They're not keeping up with these price hikes. And it may take a couple of quarters for them to pass through some of the increases on the component costs to get the gross margins back online.
What's the growth area of all of that? for them?
Well, the growth area, and you mentioned it on the read through, AI. Right, AI sales last year was $1 billion. They were on track for $3 billion, and quite frankly, I think they're going to raise those numbers. If there was any upside to the numbers on the top line, it was probably going to be AI.
You know, this is a company that has been around for, like, if we talk about this in the context of technological generations, like generations, they've seen it all. And a public company through the 90s and through the tech boom and the bust, the rise of social media, the rise of mobile, and now the rise of AI. The pivots that they've made throughout their history, like where are they right now in terms of this revolution? You know,
so in terms of AI, quite frankly, I think they're number 3 behind NVIDIA and as well as Broadcom.
That's a pretty good place to be.
Well,
or is it?
Unless it's a 2-horse race.
Okay.
Right. So, Cisco announced an update to one of their chips yesterday to get into the cloud as well as enterprise AI. Enterprise AI is going to take a few years to develop, but on the cloud AI, the race has already been won by NVIDIA and Broadcom. Right. They'll still have presence there. But it remains to be seen if they can have a deep presence there. But they are selling other things. For example, optical components, right? And we've been talking about optical a lot as it relates to the AI play. They're a number 1 player on the optical side, and I expect them to be a top 2 player there.
I mean, this is a stock that recently hit a record high, right?
Yeah.
It's taken, though, a long time for it to come back.
Yes.
What's the significance of that? And is it fundamentally based in your view?
So it is fundamentally based. From a PE standpoint, we are starting to see that earnings growth that people are looking for. And quite frankly, relative to other AI exposed names, they're not heavily tilted to AI, roughly about 6-7% of top line revenue. And it's growing. How I framed it as my preview, AI was a cherry on top to a refresh cycle. Right. So fundamentally, margin profile, even though it's slipped a little bit this quarter and possibly for the year, very good, strong cash generation, roughly about $15 billion a year, nice dividend, and good share buybacks. I mean, any GARPy investor would be pleased with that.
Yeah, it's got, I don't know, what, 30 billion in cash? Or no, forgive me, that's debt. About 15, 16 billion.
15, 16 billion in cash, and then the free cash flow, roughly around $20 billion per year that they'll give back to shareholders.
Not too shabby, right?
Yes.
So I want to get back to this idea of being third to NVIDIA and Broadcom, and this, at least that, being part of a good news if it's not a 2-horse race.
Right.
Can Cisco carve out a niche for itself?
Oh, absolutely. If we think about where they stand in the enterprise data centers,
okay,
they are the 800-pound gorilla.
Great.
If anything, NVIDIA is partnering with Cisco to get into the enterprise. So some of these sovereign AI plays, such as Humane or G42, they're leaning in on Cisco.
So explain what those are.
So Middle Eastern AI cloud, they're building their own AI systems and data centers for their own, right? To compete with someone like a CoreWeave, or to compete with someone like a Nebius, or work in conjunction with Nebius for their own country's AI systems. They're not going to go to a Broadcom or an NVIDIA because building those systems are too complex. What they're going to do is work with somebody or a company that has all of the technologies into one package so they can have one throat to choke, which is essentially Cisco.
So is this a case of we need a system, but not as complicated as you might provide us, NVIDIA?
Well,
or help me understand what that means.
So we need a system that could help us build it together.
Yeah.
Run the networks, right, with the expertise, as well as the maintenance and the support that some of these white box systems that either Foxconn or someone like that provide to the cloud. They need a lot of support to help run those systems.
But you talked about NVIDIA is it more interested in the enterprise space? Does then Cisco need to be worried a little bit?
No, not necessarily. Not necessarily, because it's really tough to knock off the 800-pound gorilla here, right? In terms of Cisco. And if anything, Cisco is already a trusted networking partner inside the enterprise. And, I sat through 3 hours of their keynote speeches at the users conference yesterday, And it was all leaning into the enterprise AI and other products that they have. They have a very full portfolio.
Stock is down 4.6%, just 20 seconds left. Why is it down? Or what do they need to be asked on the call?
It's going to be gross margins.
Okay.
How do you fix the gross margins, and why is an EPS up higher based on the revenue growth?
And that certainly plays into profitability, right?
Exactly.
All right, good stuff. Always, so quick. Woo Jin Ho, thank you. Bloomberg Intelligence Senior Hardware and Networking Analyst joining us right here in our Bloomberg Interactive Broker Studio.
Oh, we continue with earnings. It's not just Cisco that we're looking at, but also McDonald's. Shares higher. They're bouncing around a little bit. Shares higher by about 0.5 percentage point in the after hours. Some highlights. The U.S. sales grew at the fastest pace in more than 2 years in the fourth quarter. Value meals continue to resonate with cost-conscious diners. I want to bring in Abby Roach, Senior Portfolio Analyst for the Empiric LT Equity Team at Allspring Global Investments. She joins us from McLean, Virginia. The Empiric LT Equity Team, they manage about $14 billion across 3 large cap portfolios. Abby is the Consumer Stocks Analyst. The value part of this, the company's CEO was quick to point out, like the first sentence in the press release was about value. This is a return to value for McDonald's. Has McDonald's been successful in actually providing that value to U.S. consumers in the most recent quarter?
It does appear to be that way. And I think there really had been a focus, there's been a focus with McDonald's for a while on the value piece of it. But I think they also fine-tuned the value offering with the extra value meals, which rolled out in November. So they've been laser focused on this. And we're really happy to see the results in terms of, the comments in the press release, but also just in terms of the comp results, really solid results. And I think, they delivered a Happy Meal despite having such success with the Grinch meal during the quarter. So really happy to see really solid results here from them.
Always love those Happy Meals. I got to be quite honest. Hey, Abby.
Carol, they're not just for kids.
I know.
That's okay.
They are not just there. Just when you want a little something and you're on a road trip. That affordability aspect is an important one, right? And, I saw a list, I keep bringing this up, and this is just, kind of, I feel like anecdotal, but BuzzFeed doing this thing about all these things that people can't afford anymore. And it's everything from manicures to concert tickets to eating out, even at fast food places. So, so are they are doing the right thing? They're kind of going back to that route?
I think so. I'd say they're doing a couple of things well. They're leaning into the value for consumers who are seeking that out and who are really feeling stretched. They've got different offerings across different price points, across $5, $8, being able to add things on for $1. So they're really focused there. But also they're not letting their foot off the gas in terms of the marketing and the innovation. And we've seen that they re-rolled out the Monopoly offering in the fall. I mentioned the Grinch offering. That was very successful. And they're continuing, I think, to give offers